Student loan alternatives for borrowers with bad credit. For some borrowers, the high interest rates and strict approval guidelines associated with bad credit student loans may not be worth it. In this case, borrowers may turn to income share agreements. Income share agreements give you money for school, then accept a percentage of your monthly income as payment. When you sign up for an income share agreement, you'll likely receive the following terms: the percentage of your income you'll owe, the minimum and maximum amount you'll be required to pay monthly, your repayment term. Income share agreements can benefit borrowers with bad credit since most agreements don't come with strict credit requirements and high interest rates. However, income share agreement payment amounts change based on income. If your income increases or you end up in a high-paying job, you may have to pay back more than what you borrowed through your ISA. Still, the risk could be worth it if you're having trouble getting approved for other types of funding. EDLI, Best Income Share Agreement for Quick Funding. Overview: EDLI offers income share agreements of up to $25,000, with payments starting 4 months after graduation or once you earn more than $30,000. Borrowers can benefit from a quick application and approval, as well as perks like deferred payments after a job loss. EDLI's website does not specify a payment period. Borrowers can choose to pay off the loan early. Why EDLI is the best income share agreement for quick funding? EDLI advertises the fact that it has a quick application and approval process. According to the company, borrowers can check their terms within 30 seconds and complete the application within 2 minutes. No cosigner required. Payments deferred upon job loss. No minimum credit score. Does not disclose payment structure. Relatively low loan maximum of $25,000. Few direct customer service options. Eligibility and more. EDLI doesn't disclose many of its eligibility requirements. It says only that it will check your school and major. While there are no minimum credit score requirements, EDLI will check for any adverse credit history. Borrowers with late payments or collections in their credit history may have a harder time being approved. Can you get a student loan with bad credit? It is possible to get a student loan even if you have bad credit or no credit history. That said, it will be more difficult to qualify, and rates will be higher. Borrowers in this position should first consider federal student loans before turning to private loans for a number of reasons. For one, they're easier to qualify for and most don't consider your credit. Plus, the interest rates are the same for all borrowers regardless of financial health. If you need to borrow private loans after maximizing your federal potential, look for lenders that have lower credit score requirements, take other eligibility requirements into account, or let you add a cosigner to your loan. Federal versus private student loans. Those with poor credit can choose between federal and private student loans, but it's recommended that borrowers turn to federal loans first. The Department of Education sets one fixed rate for all federal borrowers, regardless of financial history and credit score. Plus, they come with payment protections and forgiveness benefits that private lenders don't offer. For example, federal payments have been on hold and interest rates have been set to 0% since March 2020 as a form of COVID-19 relief. As of now, payments are set to resume no later than 60 days after June 30, 2023, or 60 days after the Supreme Court rules on Biden's student debt relief plan. After applying for federal aid, borrowers can then explore other financing options to fill any funding gaps. Offered by banks, credit unions, and online lenders, private student loans often don't come with borrowing caps, but do offer a wider range of interest rates that are based on your credit score. Here are some of the key differences between federal and private student loans.